The investment landscape for precious metals in 2025 has been defined by a fundamental shift in the valuation of high-grade primary silver assets, a trend that Dolly Varden Silver Corporation has not only anticipated but actively leveraged to transform its corporate identity. Traditionally viewed as a high-potential explorer focused on the historic silver mines of the Kitsault Valley in British Columbia, the company has undergone a multi-stage metamorphosis over the last 12 months. This evolution has been characterized by aggressive district-scale consolidation, an exceptionally successful 56,000-meter drilling campaign, and a culminating merger of equals with Contango ore. This strategic roadmap has positioned the company as a centerpiece of a new North American mid-tier producer, Contango Silver and Gold Inc., which is to benefit from immediate cash flows in Alaska and a 20-year pipeline of development in the Golden Triangle. The core investment thesis for Dolly Varden Silver rests on the premise that high-grade assets in stable Tier 1 jurisdictions are becoming increasingly scarce at a time when industrial and safe haven demand for silver and gold is reaching historic peaks. By consolidating over 100,000 hectares of prospective land in the southern Golden Triangle, Dolly Varden has moved beyond being a single asset company to controlling a major mineral district.
The significance of this land package is amplified by the presence of 5 past-producing mines, including the Dolly Varden, Torbrit, Porter, Idaho, Mountain Boy, and Esperanza mines, which provide geological proof of the region's high-grade endowment. The transition from exploration to the precipice of production, facilitated by the merger with Contango ore, represents a de-risking event that addresses the primary concern of many resource investors, the perpetual need for dilutive equity financing during the development phase. Dolly Varden's focus on primary silver deposits, which are increasingly rare as silver is mostly produced as a byproduct of base metal mining, positions it as a pure-play vehicle for silver exposure. The company's ability to demonstrate consistent high-grade results, such as the 10,700 grams per ton silver intercept at the Wolf vein, reinforces the quality of its mineral inventory and its leverage to rising metal prices. Regional geological significance and district-scale consolidation. The Golden Triangle of British Columbia is arguably the most prestigious mineral address in Canada, hosting world-class deposits like the Eskay Creek and Brucejack mines. Dolly Varden's Kitsault Valley Project is located at the southern tip of this prolific region, situated within the same structural and stratigraphic belts that characterize these iconic deposits. The geological foundation of the project is the Jurassic Age Hazelton Group, a volcanic and sedimentary sequence that is synonymous with high-grade gold and silver mineralization in the region. Specifically, the company's tenure covers over 50 kilometers of the Hazelton Formation, including the critical red line marker, a geological contact that is often used as a primary exploration vector for large-scale mineral systems.
Throughout 2025, Dolly Varden executed a series of 5 strategic acquisitions that expanded its land holdings more than 6-fold, from 15,000 hectares to more than 100,000 hectares. This consolidation strategy was not merely an exercise in land accumulation, but a targeted effort to secure the most prospective high-grade trends in the district. One of the cornerstone transactions was the acquisition of the Kitsault property from Hecla Mining Company, which added 59,000 hectares and tripled the strike length of favorable Hazelton Group rocks under the company's control. This deal, valued at $5 million in shares, also increased the ownership stake of Hecla, one of the world's largest silver producers, in Dolly Varden, signaling strong institutional and industry support for the company's regional vision. The consolidation also included the Porter, Idaho, and Mountain Boy projects, which represent some of the highest-grade past-producing silver mines in the region. The Porter, Idaho project, acquired for approximately $1.1 million, hosts a historic mine that produced silver at average grades of 850 grams per ton between 1921 and 1931. The Mountain Boy project added 4 properties containing the historic Mountain Boy silver mine, where production grades were reported as high as 7,000 to 17,000 grams per ton silver. By integrating these high-grade historic producers into a single corporate vehicle, Dolly Varden has created a unified district that allows for systematic exploration using modern techniques that were unavailable to previous operators.
The strategic value of this expanded land package is enhanced by the recent retreat of glaciers in the region, which has exposed new areas of the Hazelton Group that have never been explored. This environmental factor, combined with the company's use of advanced geophysics and structural modeling, has opened the potential for significant new discoveries beyond the known resource areas. The consolidation of these assets into the Kitsault Valley Project provides the company with economies of scale and the ability to leverage existing infrastructure, such as the 25-kilometer road to Tidewater at Alice Arm, which significantly improves the project's logistical and economic outlook. Technical analysis of the 2025 exploration. The 2025 exploration program was the most ambitious in Dolly Varden's history, consisting of 56,131 meters drilled in 84 holes across the Kitsault Valley and Big Bulk projects. The program was designed to test the extensions of the high-grade Wolf and Homestake silver deposits, while also evaluating several high-priority regional targets. The results have consistently exceeded expectations, reinforcing the continuity and robustness of the mineralized systems. A key technical driver of this success was the deployment of directional drilling technology, which allowed the company to precisely target deep extensions from a single mother hole, thereby increasing efficiency and reducing the environmental footprint of the program.
At the Wolf vein, the 2025 drilling delivered some of the most impressive silver results in the sector. Drill hole results included 1,422 grams per ton silver over 21.70 meters, which featured a spectacular 1-meter interval grading 10,700 grams per ton silver. These results confirm that the Wolf vein remains open at depth and along strike, with structural and alteration studies suggesting that the mineralization becomes increasingly robust toward the southwest. The identification of a higher temperature alteration signature in this direction suggests that the drilling is approaching the source of the mineralizing system, potentially leading to even wider zones of mineralization near the basin-bounding fault. The Homestake silver deposit has emerged as a dual commodity powerhouse, showing significant growth in its gold inventory. Recent results from a step-out hole, HR 25-456, intersected a massive 120-meter interval grading 3.34 grams per ton gold, including higher-grade spikes of 216 and 166 grams per ton gold. This wide gold intercept, located 300 meters along plunge from previous drilling, indicates that the deposit is part of a much larger, potentially bulk-wineable underground gold system than previously understood. Further drilling at Homestake Silver intersected 26.74 grams per ton gold over 14.76 meters, within a broader zone of 12.13 grams per ton gold over 33.80 meters. These results have prompted the technical team to suggest that Homestake Silver, historically considered a silver-rich gold deposit, may now be primarily a gold deposit with a silver credit, significantly increasing its value in the current high-priced gold environment. Beyond the primary resource areas, the 2025 program successfully tested the Big Bulk copper-gold porphyry system, located 10 kilometers east of the Torbrit silver deposit. The exploration of this porphyry system reflects the broader potential of the Kitsault Valley to host diverse mineralization styles, ranging from high-grade epithermal veins to large-scale porphyry and skarn systems. The geological team's ability to integrate property-wide airborne geophysics and mapping into regional models has prioritized follow-up work on these targets for the 2026 season, which will focus on resource growth across the 85,000 hectares of newly acquired land.
The merger with Contango Ore, a financial and strategic pivot. In December 2025, Dolly Varden Silver announced a transformational merger with Contango Ore, a transaction that fundamentally changes the company's financial profile and path to production. The merger combines Dolly Varden's high-grade development assets in British Columbia with Contango's producing and advanced stage projects in Alaska to create a new North American mid-tier producer, Contango Silver and Gold Inc. The combined company will have a pro forma market capitalization of approximately US $812 million, or 1.1 billion Canadian dollars, making it a significant player in the North American precious metals market. The financial center of the combined company is the Manh Choh gold mine in Alaska, in which Contango holds a 30% interest in partnership with Kinross Gold Corporation. Manh Choh is one of the highest-grade open-pit gold mines in the world, with gold reserves estimated at approximately 8 grams per ton. During the first 9 months of 2025, the mine produced over 173,000 ounces of gold, generating $87 million in cash distributions to Contango. This immediate cash flow is a critical component of the merger, as it provides a source of non-dilutive funding to advance the development of the Kitsault Valley, Lucky Shot, and Johnson Tract projects. By self-funding its exploration and development pipeline, the merged company can avoid the equity treadmill that often hampers the share price performance of junior developers.
The merger also brings together two of the most successful management teams in the sector. Rick Van Nieuwenhuis, the current CEO of Contango and a legendary figure in the Alaskan mining industry, will serve as CEO of the merged entity. Sean Kunkun, who has led Dolly Varden through its period of rapid growth and consolidation, will serve as president. The board of directors will draw upon the experience of both companies and will be chaired by Clint Newman. This leadership group possesses the combined expertise in exploration, project development, and operation necessary to navigate the complexities of bringing multiple high-grade assets into production across two different jurisdictions. Under the terms of the merger, Dolly Varden shareholders will receive 0.1652 shares of Contango for each Dolly Varden share held, resulting in an approximately 50-50 ownership split between the two shareholder groups on a fully diluted basis. The transaction has already secured significant insider and institutional support, with approximately 22% of the outstanding shares of each company already signed to voting support agreements. The merger is expected to close in late February or early March 2026, after which the company plans to graduate its listing to the Toronto Stock Exchange and maintain its NYSE American listing.
The Alaskan portfolio added through the Contango merger provides the combined company with a diversified and advanced pipeline of projects that complement the Kitsault Valley Project. The Manh Choh mine, already in production, utilizes a direct shipping ore (DSO) strategy, where high-grade ore is trucked to the existing Fort Knox mill for processing. This approach minimizes capital expenditure and environmental impact while maximizing the value of the high-grade resource. This same philosophy of pursuing low-capex DSO projects that can utilize existing regional infrastructure is a shared development vision between Dolly Varden and Contango. The Lucky Shot project is an advanced stage gold asset located in Alaska's Willow Creek district, which has a history of high-grade underground production. A significant drilling program is currently underway at Lucky Shot, targeting an expansion of the measured and indicated resources to between 400,000 and 500,000 ounces of gold. The goal is to reach a production decision by 2027, leveraging the high-grade nature of the deposit and the potential for a DSO development scenario. The project's permitted status and the current high gold price environment make Lucky Shot a compelling near-term development catalyst for the merged company.
The Johnson Tract project is another cornerstone asset in Alaska, hosting a high-grade gold, silver, copper, zinc, lead deposit. An initial assessment completed in May 2025 outlined a post-tax net present value of $615 million and an internal rate of return of 53% at $4,000 per ounce gold. The project has been accepted for coverage on the U.S. Federal Fast 41 dashboard, which provides streamlined permitting oversight for critical infrastructure and metal projects. This designation is particularly significant given the project's critical metal content, which aligns with North American efforts to secure domestic supplies of metals essential for the energy transition and defense sectors. The integration of these Alaskan assets creates a multi-jurisdictional platform that reduces the political and operational risks associated with single asset companies. The ability to fund the advancement of these projects through the cash flow from Manh Choh creates a virtuous cycle of growth that is rare among precious metal companies of this scale. The combined entity's 20-year pipeline of development across Alaska and British Columbia represents one of the most robust growth stories in the sector.
Macroeconomic drivers, the 2025 silver and gold rally. For Dolly Varden Silver, this macro environment translates into an exceptionally high valuation for its mineral inventory. With silver prices having more than doubled in 2025, the historic grades found at the Wolf and Torbrit deposits are becoming increasingly attractive to large-scale mining companies looking to replace their depleting silver reserves. The timing of the company's expansion and its transition to a cash-flowing producer via the Contango merger could not be better, as it allows the firm to capitalize on record-high prices while having the financial stability to weather any potential market consolidation or corrections. Financial position and institutional support. Dolly Varden Silver ended 2025 in a strong financial position, having raised 63 million Canadian dollars during the year and finishing with a cash balance exceeding $60 million. This strong treasury was primarily built through a series of bought deal financings, including a $28.76 million offering in June and a $30 million offering in October. These financings were completed with significant participation from institutional investors and long-term supporters like Eric Sprott, who maintains a stake of approximately 10% in the company.
The company's shareholder structure is characterized by a high level of institutional ownership, which accounts for approximately 50% of the registry. Key institutional shareholders include Fidelity, FMR LLC, Mirae Asset Global Investments, and U.S. Global Investors. This strong institutional backing provides a level of stability and validation that is critical for a company undergoing a major merger and transition. Furthermore, major mining companies like Hecla Mining and Fury Gold Mines maintain significant equity positions, further cementing the project's industry-wide reputation for quality. The uplisting to the NYSE American in April 2025 was a defining milestone that significantly expanded the company's access to U.S. capital markets. Following the uplisting, the company's share price appreciated by more than 62%, and its market capitalization grew from approximately $304 million in late 2024 to $590 million by the end of 2025. This increased liquidity and visibility have made Dolly Varden one of the premier vehicles for investors seeking high-grade silver exposure in a safe jurisdiction. The pro forma financial strength of the merged company, Contango Silver and Gold, will be even more formidable. The entity will have over $100 million in combined cash, only $15 million in debt, and ongoing operating cash flow from the Manh Choh mine. This balance sheet provides the flexibility to continue aggressive exploration and project development across the entire portfolio, while also remaining opportunistic for further accretive acquisitions in the consolidating North American silver space.
Strategic outlook and valuation analysis. The valuation of Dolly Varden Silver Corporation has transitioned from a purely speculative exploration narrative into a multi-asset investment case anchored by immediate high-margin production and a massive mineral endowment. The current valuation is defined by the company's merger with Contango Ore, which transforms the entity into a mid-tier producer funded by non-dilutive operating cash flow from the Manh Choh gold mine in Alaska. Operating cash flow, the Manh Choh engine. The cornerstone of the merged entity's cash flow is its 30% interest in the Manh Choh gold mine operated by Kinross Gold. For the first 9 months of 2025, this asset generated 173,400 ounces of gold, with 52,020 ounces attributable to the company. This production resulted in $87 million in cash distributions during that period. Based on performance through late 2025, management expects full-year cash distributions to exceed $100 million, assuming gold prices remain near current levels. The profitability of this cash flow is driven by significant margins. The all-in sustaining cost, or AISC, at Manh Choh for the first 3 quarters of 2025 was $1,505 per ounce. With gold prices breaking through $4,400 per ounce in December 2025, the operating margin exceeds $2,800 per ounce. Looking forward, management anticipates that consolidated AISC could drop to between $1,000 and $1,100 per ounce by 2027 as debt is retired and gold hedge deliveries are completed, further increasing free cash flow.
Combined balance sheet and financial position. The pro forma entity, Contango Silver and Gold Inc., will enter 2026 with one of the strongest balance sheets among mid-tier precious metals firms. The combined company will have over $100 million in cash on hand against a total debt of only $15 million. This strong liquidity position is supported by Dolly Varden's independent financial execution in 2025, during which the company raised 63 million Canadian dollars and maintained a year-end cash balance of approximately 64 million Canadian dollars. This capital is specifically earmarked to fund the expansion of the Kitsault Valley Project and the development of the Lucky Shot and Johnson Tract assets without further shareholder dilution. Asset-specific valuation and NPV analysis. A major driver of the company's re-rating is the massive sensitivity of its development assets to record-high metal prices. The Johnson Tract project in Alaska is a primary example. net present value (NPV). An initial assessment in May 2025 assigned the project a post-tax NPV at a 5% discount rate of $615 million based on a gold price of $4,000 per ounce. Internal rate of return (IRR). The project demonstrates an IRR of 53% with a payback period of less than 1 year at these prices. Price sensitivity. This valuation represents a substantial increase from the project's base case NPV of $225 million, calculated at $2,200 gold, highlighting the project's leverage in the current macroeconomic environment.
For the flagship Kitsault Valley Project in British Columbia, the valuation is increasingly tied to anticipated resource growth. Analyst reports from Research Capital Corporation have increased target prices based on expectations that the upcoming mineral resource update in the first half of 2026 will outline 50% more ounces than previous estimates. This growth is a direct result of the 56,000-meter 2025 drilling campaign, which successfully extended high-grade zones at the Wolf and Homestake silver deposits. Analyst targets and market capitalization goals. The pro forma market capitalization of the merged company is estimated at approximately $812 million or 1.1 billion Canadian dollars. Investment analysts view the current share price as a significant discount to the company's intrinsic value. Haywood Securities maintains a buy rating with a target price of 11.25 Canadian dollars per share, implying a potential return of 73% from late 2025 levels. Research Capital Corporation provides a target price of 7.60 Canadian dollars per share, representing a 46% upside. Corporate goal: management has stated an 18-month strategic target of reaching a $2 billion market capitalization.
This valuation analysis suggests that the market has not yet fully priced in the transition from an explorer to a producer. As the company graduates to the Toronto Stock Exchange and begins reporting consolidated cash flows in 2026, it is expected to attract greater institutional interest and passive investment flows, facilitating a re-rating of the stock. Detailed summary of the combined project pipeline. The combined entity will manage a comprehensive project pipeline that spans the entire development lifecycle, providing investors with multiple avenues for value creation. In the production phase, the Manh Choh mine in Alaska acts as the financial engine of the company, delivering robust cash flows in the current gold price environment. This asset's high-grade profile and low capex trucking model serve as a blueprint for the company's future development projects. The near-term development pipeline is anchored by the Lucky Shot project in Alaska and the Kitsault Valley Project in British Columbia. Lucky Shot is moving toward a 2027 production target, supported by an aggressive 18,000-meter drill program aimed at expanding its high-grade resource base. Kitsault Valley, meanwhile, continues to demonstrate exceptional exploration success, particularly at the Wolf and Homestake silver deposits, which are both open for expansion and likely to see an increase in resource size and confidence in the 2026 update.
For long-term growth, the Johnson Tract project provides exposure to a massive and high-grade critical metal system that has already shown excellent economic potential in initial assessments. The project's inclusion in the FAST-41 permitting dashboard significantly de-risks the development timeline. Additionally, the company's 100,000-hectare land package in the Golden Triangle provides a decade of exploration targets, ranging from the big bulk copper-gold porphyry to multiple past-producing high-grade silver mines like Porter, Idaho, and Esperanza. This robust pipeline ensures that the company will remain a source of significant news flow and growth for years to come. Risk analysis. Investing in Dolly Varden Silver Corporation involves several layers of risk, ranging from near-term execution of its transformational merger to the long-term technical and environmental challenges inherent in high-grade mining. Transaction and integration risks. The primary near-term risk centers on the completion and integration of the merger with Contango Ore. The transaction is subject to a court-approved plan of arrangement and requires the approval of 66 2/3% of Dolly Varden shareholders and a majority of Contango stockholders in meetings scheduled for February 2026. Failure to secure these approvals or satisfy other regulatory conditions could result in the termination of the deal. Furthermore, the success of the merged entity, Contango Silver and Gold Inc., depends on the seamless integration of management teams and the coordination of operations across two distinct jurisdictions, Alaska and British Columbia.
Operational and resource uncertainties. While Dolly Varden has reported exceptional high-grade drill results, mineral exploration is fundamentally speculative.
There is no certainty that current mineral resource estimates, including those in the inferred category, will ever be upgraded to measured or indicated categories or eventually converted into economically recoverable reserves. Technical risks also include geological accuracy. Resource estimates may be revised downward based on future drilling results, metallurgical testing, or changes in mine plans. Logistical complexity. The company's development strategy relies heavily on a direct shipping ore model, which requires maintaining complex logistics and securing favorable agreements for third-party milling and processing facilities. Operating partnership. The combined company's immediate cash flow depends on the Manh Choh mine, which is operated by Kinross Gold. The company has no direct control over the day-to-day operations or cost management initiatives at this site. Financial and market risks. The company's valuation is highly sensitive to the volatile prices of gold and silver. A significant downturn in precious metal markets would not only impact the net present value (NPV) of development projects, but also the operating margins of the Manh Choh mine. Specific financial risks include
Debt and hedge obligations. The merged entity will inherit Contango's debt and hedge book. As of late 2025, approximately 48,000 to 49,300 ounces of gold remain committed to hedge contracts at prices significantly below current spot levels, which limits the company's ability to fully benefit from record-high gold prices until these are satisfied in late 2026. Capital requirements. Substantial future capital expenditures are required for the exploration and development of the Kitsault Valley, Lucky Shot, and Johnson Tract projects. There is no guarantee that additional financing will be available on favorable terms. Shareholder dilution. Investors have faced significant dilution in the past, with total shares outstanding growing by nearly 16% over the last year to fund acquisitions and exploration. Environmental and permitting risks. Operating in Tier 1 jurisdictions provides stability, but also involves rigorous regulatory and social oversight. Treaty obligations. The Kitsault Valley Project is situated within the Nass Area and Nass Wildlife Area defined by the NISGA Final Agreement. The project must satisfy the environmental assessment requirements of this constitutionally protected treaty, which focuses on protecting moose populations, water quality, and NISGA cultural interests.
Acid mine drainage. Some rock at the project sites is potentially acid-generating, PAG. Improper management of tailings or dust during transportation could lead to long-term environmental liabilities. Seasonal hazards. Alaskan operations face severe winter conditions. The 240-mile ore haul from Manh Choh is subject to safety hazards such as snow tornadoes and infrastructure degradation, which may lead to seasonal hauling restrictions or increased liability for the company. Conclusion. Dolly Varden Silver Corporation has executed a complex and ambitious strategic plan in 2025, transforming itself from a promising explorer into the cornerstone of a major new North American precious metals producer. The company's ability to consolidate a world-class mineral district in the Golden Triangle, deliver high-grade drill results, and negotiate a synergistic merger with a cash-flowing producer aims to further the value creation. The resulting entity, Contango Silver and Gold Inc., is uniquely positioned in the current high-grade, supply-constrained environment for silver and gold. Dolly Varden Silver is compelling for gaining exposure to some of the highest-grade silver and gold assets in North America, backed by a management team that has demonstrated the ability to discover, acquire, and build major projects. The merger with Contango ORE addresses the capital intensity of the mining business by providing a reliable internal source of non-dilutive funding, significantly reducing the downside risk for shareholders. As the silver market enters its most volatile and bullish phase in decades, Dolly Varden remains a high-leverage vehicle for participating in this historic rally, with the added security of safe jurisdictions, institutional support, and a diversified path to production. The upcoming months will be a period of significant transition as the merger closes and the company launches its 2026 exploration and development campaigns. For the investor, Dolly Varden represents a unique opportunity to invest in a company that has already survived the highest risk phase of the mining life cycle and is now entering the phase as a producer and developer.